Hi, everyone, and thanks for joining. My name is Jason Weinstein, and I'm the CEO at Cobalt Software. Before we kick off today's webinar, I just wanted to go over a few housekeeping items and do some brief introductions. First, the housekeeping. We are recording this webinar, and the video will be available afterwards. Because our panel is full, we're just asking that questions be submitted the GoToWebinar chat function, which should be on your left-hand side of your screen. And we'll plan on following up with you directly if we don't get a chance to cover any of those things during the conversation. Also, please keep in mind that we are all obviously working and participating remotely. So if there's any slight technical glitches during the session, or God knows what, kids running around in the background, thank you in advance for understanding. So with that out of the way, let's kick this off. As I mentioned, I'm the CEO of Cobalt. Cobalt is a leading portfolio monitoring solution for private market firms. We provide a centralized platform for automating portfolio company data collection, doing analysis, and doing advanced reporting on that information. And we certainly pride ourselves on providing a great customer experience with personalized support and an easy to use platform. So today, I'm happy to have this group together to talk about how private equity and venture capital firms are tackling efficiency. And when I say efficiency, really what I mean is creating ways to get all your work done at your firm faster and better, right? Whether that's through operational adjustments or potential investments in new technology. I guess this question, how do we get more efficient, right, has come up more and more recently. For my part, I talk to private equity and venture capital CFOs all the time who are looking to tech enable much of what is done day to day with their portfolio monitoring, right? That's obviously what we do. But that's just one part of the bigger picture, right? The truth is that many of these CFOs that I talk to and their teams, and actually there's research out there that supports this, talk to me a lot about the shift in expectations around their role, right? Or their team's role. And the question is really how, right? How do they meet those new demands? How do they do it as smartly and quickly and painlessly as possible? And really, that's what we're going to dig into today, okay? So we have a panel, right? And that we're really excited about. Let's talk about who's on it and do some quick introductions. First up, Saba Ahmad, the COO, CFO, and also a founding partner at Turning Rock Partners. Saba, welcome. Can you please, do you mind sharing a little bit of information about yourself?
Sure. Thanks, Jason, and happy to be here with you in the panel today. So Saba Ahmad, as Jason mentioned, CFO, COO, and one of the co-founders of Turning Rock Partners. We are a special situation investment business based in New York. We focus on credit and structured equity investments and are currently managing about $500 million of capital commitments. Prior to co-founding Turning Rock, I spent just about 8 years at Fortress Investment Group as COO of one of their business lines and started my career at PwC.
Thanks, Saba. Really happy to have you join. Next, we have Sar Menakemi, Senior Vice President at DealCloud. Sar, welcome.
Thanks for having me on the panel today, Jason. For anyone who I haven't met before, my name is Sar Menakemi. I'm responsible for much of the go-to-market efforts at DealCloud. I joined the company about 4 years ago, but I've spent the entirety of my career working with private equity and venture capital firms, helping to solve problems through technology. Before joining DealCloud, I spent 7 years with iLevel and subsequently iPrio's Private Capital Markets Group. And before that, I spent 7 years with Intralinks as well.
Great, thanks, Sar. Glad you're here. Last but not least, we have Cole Corbin, a Senior Director at Alvarez & Marsal. Cole, welcome.
Good morning, and thank you for having me here today. My name is Cole Corbin. I lead the Fund Analytics Services practice at Alvarez & Marsal. We work with mid-cap and large-cap firms and helping to decipher their technological solutions. We partner with firms such as Cobalt and DealCloud and others to help integrate and implement the best processes and best practices as we look forward to this. So I'm looking forward to addressing a lot of these questions on this panel today. Thank you.
Great. with that, let's get started. So topic number one would be changing expectations that I mentioned earlier. And Saba, you obviously sit at the management level of a private equity firm in your many roles. Where are you seeing the biggest changes in expectations specifically for the finance and operational functions in private equity?
Sure. I think I've seen the biggest change has happened over the last decade of my career. And what you've seen, I think the primary shift of the operations and finance function, where it used to be just, producing an NAV maybe 60 days after quarter end for private equity, it's now turned into a robust, more portfolio monitoring, analytics, and more real-time data type of role. And I think the primary driver of that has been a push for increased transparency, primarily from the LP base. You've seen over the last decade or so groups like ILPA develop where standardized reporting is required, and LPs are starting to look at different funds on a standardized basis, and the types of reporting that they're getting from those asset management firms becomes more important in terms of their investment decisions. So I think that's been the primary driver to move private equity firms in that direction. And a lot of that falls into the finance and operations area. And I think the other area has been the regulatory side. So as private equity becomes more regulated, the processes, procedures become more intense. And and that also falls primarily in the operations and finance function. And so again, I think that firms are building to that, both increased transparency and developing processes and procedures, and that's makes the finance and operations side the hub of the firm. And I think a last thing is, we started Turning Rocks about 3.5 years ago, and one of our goals was to build an institutional infrastructure from day one. And when you're doing that, you need increased reporting, you need increased transparency within your firm as well, because a lot of decisions are committee-based. So you have different constituencies looking at decision-making points in different ways. And again, I think that falls on finance and operations because it's the center of where data is kept. So I think those are some of the driving forces that are evolving in terms of the role of finance and operations.
Yeah. Sar, from your perspective, what are you seeing here? I guess specifically in terms of the pressures that firms are facing really to up their efficiency game.
Yeah, like almost everyone, all of us are currently working remotely. And I think this has caused many things that we've historically taken for granted because they were considered the norm, but those things are also having really big drags on a firm's efficiencies. And what I mean by that is things like just being able to ask somebody a question quickly or bumping into them while grabbing a coffee. Those things just aren't possible now without sending an email, making a phone call, jumping on a Zoom. And oftentimes we've seen and heard from many firms that the way things were run is there might be one person at the firm who controls a single Excel spreadsheet. And those are where the answers are kept. And if that's the only place to get it, right, I think as Saba was saying, that is probably not institutional architecture that you want to have running your firm. And I think firms that were running this way were probably always a step behind, but that step has probably widened significantly recently and opens up new efficiency questions like, what if that one person with the spreadsheet isn't available when you need them?
Yeah. Cole, what are your thoughts here?
We definitely see a lot of changing expectations here. One of the things that Saba had mentioned was transparency. And I think about, the evolution of the word, transparency and what it means to sort of the private equity and the alternative investment space. And, 10 years ago, I think when we first really started looking at the concept of transparency, it was about, what the past performance has been. How is your portfolio performing over the past quarter, over the past year? Today investors are asking, I think, a much more complex question. And they're looking, not only to find out what the performance of your investments and what your portfolio looks like, in comparison to, let's say, the S&P or in comparison to other benchmarks, but also the deals that you didn't invest in, the deals that you passed on, the deals that you lost out on. And, they really kind of want to look at more, sort of the what is, what's the hypothetical return, let's say if we have, a 15%, a decline in GDP in 2021 or a 15% increase in GDP. And, with the current situation, those type of hypotheticals, really, it becomes really important. In order to do that, you really need to have the right technology in place.
Yeah, that makes sense. Okay, so moving on to the next topic, which is essentially the anatomy of efficiency. And so Cole, just to continue with you, your firm is obviously an expert in helping private equity and venture capital firms get to that place of efficient management and operations, really. And so when you think about efficient management and operations, what does that really mean?
Well, I mean, two things kind of come to mind. First, what I call the myth of the management buy-in, and the second is really to kind of focus on the workflow and the processes around the technology that you select. Now, when I say the myth of the management buy-in, really what I mean is I've worked with a lot of firms over the past 10 to 15 years in implementing and adopting various forms of technology, mostly centered around, let's say, portfolio monitoring. And, we have seen, both successes and not what I would say are failures, but I would say are underachievements, right, with regard to implementation. And generally speaking, the ones that we see are most successful is where we have a commitment and a sponsorship from the management team that really defines things, as opposed to this idea of let's get management buy-in. Let's just get them to sort of, try to get everybody onto the same page. Because what surprises me is, both in large firms and in small firms, is that people will actually kind of undertake this big implementation, but not everyone has the same idea of where the goal is. And I think when you have a very sort of a very strong management sponsorship of a particular project like that, that's where we see the most success, and that's where we get most efficiencies. The second thing that we kind of want to focus on there is really on the workflows and the processes around the technologies themselves. And that is really something that I think a lot of people also overlook when they're actually selecting the technology, and they underestimate what it will actually take to actually put those systems into place and have them work for you, rather than have them kind of be, I guess, less optimal, you would say, once you have them in place.
Yeah. Sarah, what are some of the digital implications here on this topic?
We've been saying things like in the last 10 years in the panel discussion so far, but I don't even think we have to go that far back. If we only go back 3 months, and maybe Saba can talk about this as well, I'm assuming the first question she got asked by every investor once we started working from home was, what's the implication on the portfolio companies in the fund? Who's exposed, who's not? And, as Cole was saying, if you don't have a system, and I keep pointing to Excel, not because it's the villain, but because it's what most people have been using to solve, every problem under the sun. If you don't have the ability to answer that question, what you're telling your investors is, either we don't know our portfolio companies, which I don't think is true. I think every fund knows their portfolio companies, or what you're really saying is we can't answer your request fast enough, which hurts your brand or your reputation with your investors, or what most people did and are still doing is dropping everything and scrambling to get that answer, when there's relatively easy ways to get to that answer with some pre-planning, right, as Cole was saying, around system selection and best practices. And if you plan ahead to be able to solve that problem with technology, or more importantly, the right technology, it's not difficult to be able to respond to what are increasingly crazy market dynamics that we're finding ourselves in.
Yeah, Saba, I guess you've heard what Cole and Sarah said. What's your reaction?
Yeah, I think both what Cole and what Sarah said are really hitting home for me because it's the reality of I think what CFOs and COOs are living in. Going back to Cole's point in terms of picking the technology and having management have an expectation of what that will be used for. I think that's the critical thing. Is I think again, I won't use the term implementation failure, but something equivalent to that is when you don't have that push to have everybody on a system, when people are not aligned in what their vision is, then it doesn't get used because at the end of the day, Excel is there and Excel is what everybody knows how to use and Excel is quick. It's not always the most accurate, it's prone to error. But everybody says, well, you can go plug it in the spreadsheet and come back in 15 minutes and give it to me. But that's not the way to build a business with efficiency and with accuracy. So you have to be able to depend on the data and the calculations that that are being made. So I think that that's one thing that we spend a lot of time at Turning Rock thinking about is where in the process should we implement the technology, because technology is there and it creates efficiencies. And then, what is our expectation of that technology? Where will it create the efficiency? It's not going to fix everything. It's not going to take away Excel. And I think planning and doing that up front has been really helpful in the past, 4 months when, our LPs do want to know what's going on in the portfolio. And myself and my team can spend a lot more time speaking with management teams and getting into the nitty gritty with them rather than trying to figure out, okay, what's been the performance of this position, what's been going on, because that's already built into the process and into the technology.
Yeah. It's actually an interesting segue kind of into the topic of like compliance and regulation, right? And so, obviously compliance and regulation is a increasing, every, I say, year that goes by is a bigger topic, right? It becomes just more and more relevant. And there's a lot of firms, I'd say, at least from what I see, that feel pressure to put in, these firmer governance controls, to meet this type of scrutiny from LPs or from other places, right? Including the government. Sar, maybe it would be great can you just walk us through some of what you're seeing on this front? What are firms putting in place to address these things?
I think the scrutiny topic is one that's really interesting. Most firms have gone through either a fund formation process or registered with the SEC, or have certainly fundraised to some capacity. So they're used to at least some element of scrutiny. I think historically many firms thought governance was only focused on the back office. And I do think there are many elements in both the middle and front office as well. Cole alluded to one of those before. What are the deals that you passed on, right? And if you don't have a process for tracking that or a governance for understanding that, from an LP's perspective, we hear often from the fund managers and the sponsors that we work with that they get questions all the time about their deal flow or their deal execution process, or what does their pipeline look like, or what makes their fund special from a sourcing perspective, and how good are you at tracking your portfolio companies, and how good are you at generating returns? Is it just paying down debt, or is it something else? And those are things that are getting asked with increasing frequency. And I think just the general topic of operational due diligence of the entire firm is open for review at this point, when maybe it was historically all about performance and maybe to a lesser extent about fees paid. But all of those efficiencies, and not just in the back office, and not just scrutiny about the quarterly reporting package, are things that we're hearing a lot more about lately.
Yeah. So Backseat, right? We're talking about we're talking about LP expectations and also regulatory changes that could possibly take place and things of that nature. And just from the topic of operational efficiencies, right? What do you think is a bigger driver? Is it the LP or is it the regulatory stuff? Or maybe it's not even, an either or framework here.
Yeah, I think it's the latter, right? There's both are equally important, and to the LP, the regulatory side is really important. They don't want to be invested in an asset manager who's not taking that seriously. And on the regulatory side, they're concerned about the protections of the LP. So it all goes hand in hand. And it's what Sar just mentioned. All those questions are things that I can't even count how many times we've been asked about our deal flow, how we track our pipeline, where do we source our transactions. The LP community and the regulators are concerned about the full ecosystem of how a firm operates. And, I think that's part of the process and procedures that have to get implemented across a firm. Oftentimes, some of the regulatory issues start the way a transaction is structured. And then by the time it gets to the back office, things have already happened that you haven't really thought about, and the decision point should have happened before then. So I think, again, it's for us, it's making sure that the decision makers are focused on those things. And then we're building in efficiencies through technology and things like that. So we're not mired in the numbers and in all the weeds, but rather we're focusing at the top level and making those decisions at the time they should be made.
Yeah, makes sense. And so, I mean, kind of makes me wonder, like, Cole, at from your standpoint at Alvarez and Marsal, right, as a consultant in the space, how do you guys help clients think through all these different pressures?
Well, I think what, the way that Saba had just put that was quite eloquent, that it is kind of all tied together, right? It's kind of a feedback loop there. Often we think about sort of LPs driving the expectations, and then regulatory sort of government kind of catching up to where what the LPs want to do in order to protect them. But it does become a kind of a feedback loop there and a circle. And in order to kind of address that, meet that, you have to have the right technology and the right sort of tech stack kind of build out. So, as Sar had said, I think traditionally speaking, when we thought about regulatory, we were thinking back office. That's not the case, now. That's not the case going forward. Certainly, when you look at where regulation is going, it's always going to get more and more. It's never going to get necessarily less, although we may be in a period, I think, where we're going to start ramping up and seeing a bit more regulation, but we're going to also be seeing a lot more questions around ESG it used to be nice to have. It used to be something, now it's just going to be a basic, tenet. It's going to be something that you're going to have, and it's not going to, kind of distinguish you anymore. But it's going to be, what's going to distinguish you is going to be on the negative side if you don't have it. So those are kind of the issues and things that we like to bring up and kind of talk through and figure out where each of our clients are.
Yeah, and you mentioned the tech stack, right? In terms of that tech stack, what does that look like, to you from a private equity or venture capital firm standpoint?
Well, I think, by and large, when you think of a tech stack from an alternative investment standpoint, you have sort of your front office, your middle office, and your back office. And when you think about, historically, I think up till even maybe earlier this year, kind of thought about those somewhat distinctly, not necessarily in isolation, but you thought about the constituents of those as separate constituents. What we're beginning to see, and this again kind of ties back to what I was saying earlier about that, I think that transformational and evolutionary definition of transparency, which is, just in my example earlier, we work with some of our, I would say our more further along clients are actually looking to, compare sort of what their portfolio would look like if they had, been able to track the investments either they passed on or that they lost out on. Now think about, what would that require? It wouldn't just require, a Cobalt solution. It would also require Cobalt and Deal Cloud to really be connected and working with each other, because those investments that you haven't made may not make it into that portfolio monitoring system, but they would certainly be there in Deal Cloud. So we really begin to think about a tech stack that's a little bit more flexible, that's a little bit more interactive, and you build around that tech stack specific workflows and processes that'll kind of deliver that product and allow you to then sort of justify, I think, and really stand out amongst that LP community.
Yeah, I guess, it's interesting. Saba, like from your perspective at Turning Rock, you heard what Cole said, obviously.
Mhm.
Is that how you look at your firm's tech stack?
Yeah, it's funny. Is it when we think about tech stack, right? It's not what we do in our core business, right? So when we think about where to implement systems and things like that, it's still somewhat new to private investment businesses, because you think of yourself as we do deals and then we realize deals, and that's the process. So when we think about the tech stack, we're still growing. We're at the first phase of our firm, and I think that's, I've seen in my past life, times where you kind of hit a critical point where it's harder to implement the technology. People are not as, will not be prone to use it because it's not what they're used to, or there's too much data that's being handled outside the technology, so it's not efficient. So we're trying to think about where to implement it now. And we've done it on both sides. We've done it on the deal side where we track our sourcing, we track how many deals we're looking at, we track what we close, what we pass on, the reasons for passing on it. And then we're doing it on the operations and the back office side with a system like Cobalt. And I think what Cole mentioned, it's still early to figure out how those two systems marry together. And how do you really think about that in the future of deals you passed on, or the types of deals that you want in your next portfolio, and how to build around that and how to use the technology for that. Because sometimes it becomes more of a tracking tool, but how does it become more of an analytics tool and something to look at to build your business forward?
Yeah. Sar, what are your thoughts on all this?
Yeah, I think Sab and Cole both made really good points, right? The software industry that supports fund managers, private equity, venture capital, real estate credit, is an industry that's only really been around for 20 years, right? And Cole's point about thinking of it in the lanes of front office, middle office, back office, but with an eye on kind of connectivity is, I think, the right way to do it. If you think about your firm, it's highly unlikely that the person who's generating capital calls is probably not the person who's responsible for sourcing. And the reason for that is that requires different skills, different knowledge, and you should really think about technology the exact same way. There are different platforms that help solve specific problems. And, just like we wouldn't pick up a calculator and expect for it to make a phone call because both phones and calculators have numbers on them, I don't think using your accounting system to source transactions is the right way to think about, hey, we have technology and we've enabled our firm to accomplish their goals.
Yeah, makes sense. I'm going to bring up a topic that I've got to bring up around the coronavirus, which we've alluded to in some of the previous discussion, but I just want to single that out for a second, because I think in these times, right, we've obviously felt a greater sense of urgency from a lot of firms around the questions that we're asking today, right? And it obviously makes sense. You got remote working conditions, an uncertain economic outlook. I guess, Saba, like at a firm like yours, right? What has suddenly become a priority, and what is all, and at the same time, what's taken a back seat?
Well, I think everything continues to be a priority, and I don't think anything is able to take a back seat anymore. I think that the industry has shifted, and the expectation now is that firm business continuity plans, they're tested, and that if something like this happens, that you're able to continue to do everything that you were doing before, but remotely. So I think the expectation is that things continue, and our peers are also able to continue their businesses. So there's at this point nothing really can take a back seat. You still have to do all the work for the portfolio. You have to track it. You have to calculate an NAV. You have to do capital call if you're closing a deal. All things that we've been able to do over the last 4 months. So I'm proud of that. And I think we're in a situation right now with coronavirus where we don't have an end date for this. This could go on a long time. And all the planning and the the projects that we had in place, there's no reason for them to stop, in my opinion, right? That you have to figure out how to operate in this new world, and the technology is there. We've been able to do it now for 4 months. There's no reason we can't continue to do it for 8 months. And and that brings you back one day when we are back in the office. It brings us back stronger, and it brings us back to where we expect it to be.
Yeah, I can tell you, totally makes sense. I mean, from my standpoint, there was probably a few weeks there when in March, when there was a ton of uncertainty and things kind of stopped for a little bit. Maybe it was a couple of weeks, and then all of a sudden it was, time to get going again. Sar, I guess from your seat at DealCloud, especially in terms of let's just say demand for a solution like yours, like DealCloud's, what are you seeing?
Yeah, and just to echo what you just said, Jason, I think there was 10 days in March that were really touch and go there for a while. But what we're seeing now is a lot of firms are trying to take advantage of the situation. And there's this moment in the market that, it's almost been unprecedented, that's ripe for capitalizing on. And I mean, if you're normally used to closing transactions or exiting a portfolio company every day, and if those aren't happening at the same volumes as, previously, that means that there are many firms that can take advantage of the situation and be the first ones out of the blocks by sort of getting their efficiencies and systems in order whenever we get back to normal, or as Saba was saying, whatever normal is going to be at this point, kind of going forward. We did a survey recently on the DealCloud side where we took a pulse of the market. And what we found out was that large firms, from a sourcing perspective, were almost unanimously focused on corporate carve-outs. And boutique firms were evenly split between corporate carve-outs and recaps and some other deal sources in the mix. So the question is, what are people doing to take advantage of that situation? What are the potential distressed assets that are going to be available to buy from a corporation? Who are the companies that are even ripe for a recap? And if you don't have a solution that can answer that question, and maybe Saba was saying this originally, at the beginning, your firm is probably behind the curve at this point with a lot of your peer firms that are out there. And we're seeing things like that drive a lot of demand for systems like DealCloud.
Yeah. Cole, what are your thoughts on all this?
Well, just to echo what everybody else said, certainly, these are new, these are sort of a very interesting times as we have a new normal that we're in right now. We'll probably have a continuation of sort of plateaus of new normal coming up in the next 8 months or the next year, because we really don't necessarily know when we're going to be able to all go back to the office and whether or not we all really need to go back to the office in the same way. It's easy for me to say I'm a consultant, so I'm often on the road and doing those things, but I definitely see I think a level of sort of surprise at how efficient people are working, despite the fact that sort of the economy shut down there for those, and there was that period of time, I think where all of us thought in mid-March, we didn't know what the implications were. But now that as we move forward, the things that we need to think about, like Sar had just mentioned, is in which direction, are we going to be, looking to kind of take the next steps. I think we've seen a compression, a timeline compression with regard to the adoption and utilization of technology, and I think that's really the opportunity here. And so, although there may have been sort of a quick pause there as we talked when we shut down the economy, right now we just see a lot of things ramping up, at least on the tech side, because they're looking, to technology as really the, to find the answer to where we're going to be and to kind of get us out of this as we move forward. So again, very, very interesting times, and we're just, we're here to march along with the rest of you guys in order to bring us to that, to where we end up.
Yeah. Okay, cool. I guess, to round this out, I guess the last topic, or I'll just say, I don't even know if it's a topic, but just getting some closing thoughts on all the things that we've discussed. And I'll start with you, Cole. Let's just, if we zoom out for a moment, right? Getting back to the topic of operational efficiency, right? What do you think first when you think operational efficiency at a modern private market firm?
Yeah, well, I think just to kind of combine everything that we've kind of talked about here, I think firms that can, embrace, the change and then have a commitment to technology, but while remaining flexible. And I think that, that really requires, everyone's attention, right? I mean, I think that's really something that we're going to see right now, just marching forward, that there has to be a level of commitment that we haven't necessarily always seen before. If you're going to kind of sit back and still try to figure out, which way the wind's going to blow, you're going to be behind the times, and at that point, it's going to be very difficult, to catch up. At the same time, you do have to focus on sort of the interplay between all the different constituencies with, not only outside the LPs and the regulators, but also internally as well, between the front office and the middle office, and the middle office and the back office, and back again to the front office, and how we kind of think about that.
Sar, what are your thoughts?
Yeah, for a closing thought, I would say that there are many solutions out there that are purpose-built and focused exclusively on solving problems for private equity and venture capital funds. We spoke about many types of firms today, but obviously Cobalt and DealCloud are two examples of that. And my parting words would be, if you're not familiar with what these solutions do, why not at least educate yourself on what's possible?
Yep. Makes sense. Saba, to close us out here, would love to get your thoughts, and in particular, I guess, how realistic is it for a firm to achieve all this stuff?
Well, I like to think almost anything is realistic if you put your mind to it. So I think what Sar and Cole were just mentioning again hits home, because it's getting all constituencies at a firm to buy in and to be supportive of technology. And again, I think that as we talked about at the start, the finance and operations role is growing. But I think that some of the walls we talked about at a firm, the front office, middle office, back office, those walls are coming down as well. It's got to be more of a one firm approach. And especially if you're trying to get your various systems to talk to each other and integrate, then, different teams have to be involved in that. And then really understand what do you expect out of those systems, and where do you think that will help your company become more efficient?
Got it. Okay, so well, that is all the time that we have today. I guess first, let me thank everyone for joining, especially to the people that have logged on to the webinar, and certainly to our guests, Saba, Sar, and Cole. Thank you guys so much for participating in this. If in our audience, if you submitted a question during the discussion, our team will make sure to follow up with you shortly after the webinar ends to get in touch with you and directly. And if you have any other questions, please do not hesitate to reach out to any of us. We're going to flash some contact information on the screen here that you can see, that you can send in an email, or you can contact one of us directly, and we will get in touch. So on that note, I hope everyone stays well, and we'll talk to you soon.